Earlier today, I did a video talking about gold and gold miners and the question of whether it's a good time to buy them or not. And now today I'm doing the video on silver and silver miners, and is it a good time to buy the silver miners or not? But before we do that, I'd like to just dispel a rumor which has been circulating on the net. And the rumor was that JP Morgan had sold all of its, it had closed all of its short positions at the lowest price of the day, which is $78.29. That rumor appears to have originated with what you're looking at on the screen at the moment, which is a report from COMEX. It's a regular COMEX report showing the deliveries of silver which are taking place, and this kind of report gets published every day. Unfortunately, I think a lot of people have got the wrong end of the stick. This particular image, which is one circulating widely, shows that JP Morgan took delivery of the silver underlying 633 contracts of the February maturity futures.
What's going on, everyone? So there's been this absolutely wild rumor tearing through the precious metals community over the weekend, and I need to break down what's really happening here. Clive Thompson just dropped a video addressing the JP Morgan conspiracy theories that exploded after Friday's brutal silver crash. And honestly, most people are getting this completely wrong. He's walking through the actual COMEX delivery data and showing why this isn't what everyone thinks it is. Plus, he's making a fascinating case about silver miners that almost nobody is paying attention to right now. Make sure you stick around until the end, because the earnings analysis he presents is absolutely game-changing for anyone holding mining stocks. And hey, drop a comment below and let me know where you're watching from. I love seeing this community spread across the globe. Alright, let's dive straight into this.
Hello, dear friends. My name is Clive Thompson. Today is Sunday, February 1st, 2026. Last Friday, we saw an almighty collapse in the price of precious metals, gold, silver, platinum, and palladium. Earlier today, I did a video talking about gold and gold miners and the question of whether it's a good time to buy them or not. And now today I'm doing the video on silver and silver miners, and is it a good time to buy the silver miners or not? But before we do that, I'd like to just dispel a rumor which has been circulating on the net. And the rumor was that JP Morgan had sold all of its, it had closed all of its short positions at the lowest price of the day, which is $78.29. That rumor appears to have originated with what you're looking at on the screen at the moment, which is a report from COMEX. It's a regular COMEX report showing the deliveries of silver which are taking place, and this kind of report gets published every day. Unfortunately, I think a lot of people have got the wrong end of the stick. This particular image, which is one circulating widely, shows that JP Morgan took delivery of the silver underlying 633 contracts of the February maturity futures. Now, they could have been doing that on behalf of themselves, or they could have been doing it on behalf of one of their clients. But what it does not show is that they closed their short positions, if they had any at all. Or most likely, this is simply a delivery of silver on behalf of one of their clients who said, I want to take delivery, perhaps I'm a manufacturer, I need the silver for my manufacturing process. But even if it was JP Morgan who were closing their short position by, it's not really closing a short position. What we see is they're taking delivery of silver, which means they were long here. So they're not closing a short position. But even if it was a closing of a short position, 633 contracts is about $250 million. That's a drop in the ocean compared with their $54 billion annual profit. It's neither here nor there. And in any case, even if they were in some way, shape or form closing their short position, what we're looking at is delivery of contracts under the February contract, delivery of silver under the February futures contract. What about March or April or May or June and so on? It doesn't really tell us anything at all. So I don't know why people have misinterpreted this, but they've got it the wrong end. And perhaps what I'll do, I'll just have a look at if I can get it up, ChatGPT's interpretation of this. Let's get that up. I've got to go to new chat. Let's do Let's try that. Yeah, I should be able to show you that. Right, let's bring that up. So, as you can see, I said, in the light of what you see, actually, I said, please interpret this statement from COMEX. And it says, great question, blah, blah, blah. This is a COMEX daily delivery report for contract February 2026 silver futures, 5,000 ounces, intent date 30th of January, delivery date 3rd of Feb. It shows who is taking part in physical delivery for that contract month. In COMEX terms, issued is contracts delivered, metal handed over, and stopped is contracts received, metal taken in. So each contract is 5,000 ounces. What JP Morgan did here, it says JP Morgan Securities, does it say minus 633 or does it say 633 issued? So it looks like they've delivered it. It means JP Morgan Chase via its brokerage arm took delivery of, I think they mean delivered, 633.
Okay, so there's this massive rumor spreading across social media about JP Morgan supposedly closing all their short positions at the absolute bottom of Friday's crash at 78.29. That would be the trade of the century if it were true. But here's the problem. It's not what happened. What we're looking at is a COMEX delivery report showing JP Morgan took delivery of 633 contracts, about 3.165 million ounces of silver. People jump to conclusions thinking this means they covered their shorts at the bottom. But that's not how delivery reports work at all. Taking delivery means they were long on these contracts, not short. They're receiving physical metal, probably for a client who needs actual silver. This has nothing to do with closing short positions. And even if it was, we're talking $250 million here. JP Morgan makes $54 billion in annual profit. This is literally a rounding error. Plus, this delivery report only shows the February contract. What about March, April, May? This tells us absolutely nothing about their overall positioning. The internet took one piece of data, completely misinterpreted it, and turned it into conspiracy theory. We need to stick to facts, not speculation based on misreading delivery reports.
Dollars, which is a drop in the ocean compared with JP Morgan's $54 billion profits every year. Neither here nor there. But it is a large physical receipt. What this does not mean, it does not mean that JP Morgan closed short positions. It does not mean that JP Morgan covered paper shorts, etc. This report shows only physical settlement for one contract month. It says nothing about OTC derivatives, swaps, options, London Bullion positions, internal hedges, client positions, future book. And of course, it doesn't tell us anything about what position they had in the other contract months. But let's now move back to silver and should you buy the silver miners. We're looking at what happened here. Silver price fell by 26.44% or $30.52 to a price of $84.92, which you can see this blue line going across here. And down below, I've got the chart. This chart at the bottom is the chart of the the Global X silver miners, the big silver mining companies. So the silver price fell today, or Friday rather, to $84.92. The last time it was there was about 14 working days ago, about 18 actual days ago, on the 12th of January. And on the 12th of January, it closed at the same price as it closed today. So this is the lowest price, if you like, for 15 or 16 days of silver. But if we look down the purple line going down here, we can see that the the Global X silver miners, symbol is SIL, closed today at Friday, $94.30. There we are, $94.30, down 14.78%. And last time the silver price was where it is today, 16 days ago, it also closed at $94.30. So my conclusion is that if the price was right 16 days ago, the price is right today. It's neither too high nor too low. But the question is, should you be buying silver miners, not whether it's too high or too low, but certainly compared with those two dates, 16 days ago when the silver price was where it is now, and today, we've found that the SIL, the ETF of the silver miners, is also in exactly the same price. So what's going to happen on Monday? Well, for sure it's going to be an extremely volatile day. We're going to see large swings up and down, and perhaps in the opposite order, but there will be very big swings, and anybody who's trying to trade it will risk getting caught at the wrong end. Your emotions are going to run wild. The prices start to climb. People will be chasing it up and chasing it up and chasing it up. Then it'll turn on a 6 months and go all the way down, and people will chasing it down. The stop losses will be being triggered. Then it'll go back up again. It's going to be a yo-yo day. I don't know which order it'll be, and the price will not finish, I think, where we finished on Friday. On Friday, many people unwillingly ended up with cash due to their stop losses. So now they're sitting on cash, wondering what they should do, because they're actually holding an asset which is going to go down in value because the governments are increasing the levels of debt and will continue to increase the levels of debt so long as they run budget deficits. And that basically means governments get poorer, someone else gets richer, and that someone else is going to buy things with it, which might include silver. So if you've got into cash, you need to think about whether you want to stay in cash or whether you want to find your way back in. But to be honest with you, it's a dangerous day to do it on Monday.
So let's talk about what actually happened to silver. We saw a brutal 26% drop, with silver falling over $30 to $84.92. But here's what's interesting. The last time silver was at this exact price was just 16 days ago on January 12th. And the silver miners ETF, $94.30, the exact same price it closed at on Friday. This shows us something important about relative valuations. If the pricing was correct 16 days ago, it should be correct today. The miners are tracking the metal price almost perfectly. Here's crucial context. Silver rallied from $48 in December all the way up to $110 in January. That's a massive move in a short time frame. And whenever you get parabolic moves like that, you're going to get violent corrections. This is completely normal in precious metals bull markets. What really resonates with me is this. If you own physical metal, the number of ounces you have doesn't change just because the paper price dropped. You still have the same amount of real wealth. The only thing that changed is the dollar price. But Monday is going to be absolutely insane. The volatility will be extreme. Panic buying, then whipsaws triggering stop losses, then spikes back up.
What about me? Am I selling or buying? No, I'm not doing anything, and I'm not planning to do anything, and I didn't do anything in the crash, and I didn't forecast it. Of course, every bull market is a wall of worry, so inevitably, along the way, we'll always get large dips, though this one is really large, but it's not unusual to get a dip along in a bull market. So we could still be in the bull market. I don't know that. But a dip along the way is not at all surprising. Did I lose any money? Well, I can tell you this. I counted my silver coins, and I seem to have just the same number as I had before the crash. So I don't think I've lost any money there. I've got, perhaps I had 10 before and I got 10 afterwards. They're still there. Now, if silver and gold had not rallied so strongly in the last 10 to 15 days, you wouldn't have even noticed today's prices being unusual. It's only unusual because we had that huge spike up that you see on the chart here. There we go. It suddenly it was fairly flat, and then it started accelerating way up, going faster and faster with bigger and bigger jumps. If it hadn't been for those last few days of jumps, you wouldn't have noticed today's prices being anything unusual. We'd be all getting excited. Wow, silver's 84. It's well above the $50 barrier, and it's not ever getting back to 50. We'd be excited. But that's what's happened. Now the question is, I'm going to answer the question: what happens to the silver miners? Should you buy them? I keep asking that question. Well, what I can tell you is that every silver miner, which is digging out of the ground and selling its silver, should be reporting much higher profits than it did when for the previous 3 months. Because if we go back here, look at the silver price, and I'll just bring that into range here. Now, I'm going back to the quarter which ended, reported quarter which ended, was the quarter ended from June to September, and the silver price was around $34 and by September it was just touching $40. So between $34 and $40, let's call it $37, $36, that was the price at which they were selling their silver in the last reported quarter. The next reported quarter will be until December, and the average price in the quarter of December will be somewhere between $40 and $56. So let's call it $48. So the average selling price will have gone from $38 to $46. And now what about the next quarter, which is going to be March? Well, we don't know what the average price in March is going to be, but I'm betting that based on what we now know, it's going to be higher than $48. So when we get the year-end results to the 31st of December 2025, which will be announced probably for many companies in mid-February, they're likely to show the last quarter with much higher profits. And when we get the first quarter profits for 2026, which will come out in April, May, June for some, they will show much, much higher profits than they showed in December. So what we're going to see is a series of ever higher profits. And when these results come out, that's the moment when the dealers tend to revise their estimates upwards to reflect the new reality.
Now here's where this gets really interesting, and most traders are completely overlooking this. Clive is walking through the earnings trajectory for silver miners, and the numbers are absolutely compelling. In September 2024, silver miners were selling their production at around $37 per ounce. By December, that jumped to $48. That's a 30% increase in revenue per ounce. But here's what's even more important. We're now in the March 2026 quarter, and the average selling price is going to be significantly higher. We're probably looking at $70 to $80 average for the quarter, even with Friday's crash. Do you understand what this means for earnings? Silver mining is a leveraged play on the metal price. When silver goes from $37 to $70, the miners don't just double their revenue. Their profits explode because costs stay relatively fixed. We're talking profit margins 3, 4, even 5 times what they were 2 quarters ago. And here's the catalyst. When these companies report December results in mid-February, analysts will have to revise estimates upward. the market will have to reprice these stocks based on much higher sustainable profits. So what do you guys think of this? Leave your thoughts down in the comments. Please like and subscribe, and I will see you in the next video.